And Wednesday, we got oil numbers out.
We sure do. So, oil has had some volatility this week for sure,
big
right?
time. It was down big yesterday.
Yeah, so let's jump into here. We're going to jump into our commodity spreads. Oil, so it's 10.19, let's call it right now. And let's jump in first to the 11 a.m.s. We'll jump. So oil right now trading 62.34. Let's pull up the chart as we get into this. So quite a cascade. This is about 4 in the morning, even from 63.40 down to 62.16. So about $1.25 to the downside. And I mean, even backing this up where we just were, you know, if you back it up just to Monday, we're above $65. So we're down pretty substantially, getting some volatility. So 62.33. We'll jump into the 11 a.m.s first. 62.50 is going to be a price point that we can use. We're looking at maybe setting up, volatility. So we'll have a bullish and a bearish spread. Here's our bullish spread from 62.50 up to 64, $1.50 in either direction, and here's our bearish spread going from 62.50 down to 61. So again, we're 62.35. So the bearish spread is going to be the one that has some intrinsic value, about 15 cents. Bullish spread slightly out of the money. So the bearish spread is going to be more expensive to the tune of 15 cents because that's going to be the intrinsic value you're paying. You'd be selling the bearish spread. It's going to cost you $30. 15 cents of that is intrinsic value, 15 cents a premium. And the reason why I point out the intrinsic value versus the premium, because then when you go to the bullish side, that's all premium. Guess what? Same exact premium, right? Just no intrinsic value, basically. So you're looking at about $45, which would be 45 cents away from 62.50. Becomes your break even. Okay, so those are the 11 a.m.s. Now, we haven't jumped in, and we're going to have to refresh this. I had this up, so we got to get our noons up here. That's what's going on. We'll refresh it. And all you do is you just refresh the screen. I'm just taking down my own information so it's not up there. And we'll get it back over here. Okay. So because I have been looking at the NADEX platform all morning, these spreads are loading every hour, basically, as the market is coming to, right? So again, we're going back into crude oil, and now you'll see the 10 till 12s are available. I'm just going to close out some of these screens for simplicity. Get that, close it out. Okay, so again, we're trading about 62.30 now. And so these line up with different price points because oil's been moving so much this morning, like we talked about. So 62.30, what's interesting here is looking at the 11 a.m.s, right? We had a little value on the bearish spread. We had 15 cents. So that might work out nicely if you were slightly bearish. You had a bearish bias. What if you're bullish bias, but you still wanted a volatility trade? The noons actually line up, I guess you could say, I was going to say a little bit better. You could choose. You can choose either 62 being your point, and I was just saying, or 62.75. You know, they go both ways. But yeah, so in this case, 62 being our kind of pivot point, going up to 63.50. Your bullish spread's going to have all your value, but this time you're talking about 30 cents of intrinsic value. This is where it might get a little expensive. But if you're really bullish bias, maybe that's something you want to do because the bearish spread's going to be cheaper because you're so far out of the money now. So here's your bullish spread, 62 to 63.50. You got 30 cents of intrinsic value. You're paying 42, so $12 in premium. And this is where things line up so nicely as you get used to this, because guess what? Then you're selling the 62 one, no intrinsic value, about 30 cents out of the money, and you're paying the exact same premium, though, $12, right? So that's lining up at $54 for the noons. And let's just jump around to see where the 230s line up. So 230s line up at 62.50. Okay, now that's where
that's the same as the 11.
That's where our 11 a.m.s were. Now what's interesting about the 8 till 230s, I'm just going to jump around. Yeah, so that's going to be, so these are $3 spreads too. So instead of $1.50, you can have $3, and we'll pull this up. So here's our bullish spread, 62.50 to 65.50. Here's our bearish spread, 62.50 down $3 to 59.50. And again, we could be, where was our 11 a.m.s? I just want to get this straight again.
11 a.m. was a 45 cents it was costing
You're right. Yeah. Okay. Perfect. So 62.50. Bearish spread on the left. You'll be selling this. Costs you 46.
That's right, because that has the value on it.
It does, and it's a lot of that. Now it has $3. It does have, so you have 20 cents of intrinsic value now because it's at 62.30. 20 cents below the ceiling of that spread, and we're selling it. But also, what the big premium you're paying for here isn't the $3 potential. It's that you have until 2:30 versus 11. Yeah. And you know, as we've seen this week, last week, that the market moves between 11 and 2:30, you know,
Right.
so if you want to just play like a few minutes of the EIA numbers coming out at 10:30, the 11 a.m.s might be nice. But that's where the market's going to make you pay for the extra 3.5 hours from
Right.
11 till 2:30. You get defined risk, and you have profit potential to the tune of $3. So again, you're looking at $47 on the bearish spread, and then
Yep.
the bullish spread, you're going to be out of the money. This is going to be slightly cheaper, but you can see, even being 18 pennies out of the money, you're still paying $28 in premium just to have that spread from 62.50 to 65.50. So what are you looking at there? About $75.
You know, what's interesting here is that, so the trade from 11 to 12 is costing you an extra 15 cents. The trade from 12 to 2:30 is only 15 cents too.
Yeah, but what happens is
One's
the
a bullish,
11 and
one's a
12s are
bearish.
dramatically different, and
Right.
there's 30 cents of intrinsic value versus 15
That's
cents
right.
of intrinsic
And
value.
time.
That's where things really change.
Right.
Yeah, so interesting setup, and you know, no matter what, we've gotten some good action on crude the past couple weeks, man.
Oh, yeah.
As we've approached $70 at one point, we approached $60 at one point. It's about 10:25 right now. We got 5 minutes still in the news. Those are the setups, and what's nice is, regardless of what your market direction is, your market bias, you can see the type of options you have, all with defined risk, right?
Big
And
time.
all of these are two-way directional volatility trades.
Right.
And, you know, just to keep in mind, if you're one way or the other directional, you can obviously take one or other of these trades. You know, as in, if you're bearish here and you're just bearish, you can go in here and you could just sell it. And basically, the market's at 62.30. You're selling it at 62.03. So you're paying 27 cents in premium in the
Yeah.
oil contract.
Right.
You know, and basically, you're selling it at 62.03. That becomes your break even, right? But what's nice here is, your defined risk up to 62.50, no matter what.
Huge.
You know, as you're about to get inventory
Right.
numbers in less than 5 minutes, and meanwhile, you have profit potential until 2:30. If it happens to move $1, $2, which is not out of the realm
No,
where we've been.
we moved that yesterday.
Exactly.
Yeah.
So,
Welcome back, folks. Oil. That's
Yeah.
a big number, man.
it is a big number. So we had inventories. Let's pull this over, and you can see the price action here. We're up to 62.70. We
Yeah.
were trading at about 62.30, 62.35, somewhere in those analysis. The analysis we were doing pre-numbers. So inventories fall 4.62. They were looking for a rise of between about 1.6 to 2
Yeah.
million barrels.
Right.
Quite a miss in terms of inventories falling 4.62. That's the headline number. Crude inventories falling 4.62. Market median estimates were looking for a rise of about 1.6 or 2.
Big number.
Less oil, right? Less
Right.
supply.
Right.
Prices going up where supply equals demand. So that's why you see that price rising. Gas inventories falling 1.12 million barrels. We'll check back as those numbers continue to load into...
What a disconnect from the API last night.
So-
because the API had them up last night also.
Okay.
The crude inventory.
Interesting,
Yeah,
yeah.
I know. Yeah.
So as we check back, market spiking, 62.76 currently. So just to kind of recap again, as we were jumping around, right? We had the 11 a.m.s.
Yep.
We were going to be using 62.50 as our price point. That would have been a slightly bearish bias because we
Yes.
had some intrinsic value on the bearish spread to begin with. Now the noons, though, which was interesting.
Right.
That's where we're using 62, right?
Yes.
So that was costing us about
60 cents.
60
We
cents
needed
for
62,
both
60,
contracts.
yes.
And so you can see when that, and that's why we talk about the bullish and bearish bias, because you had a 30-cent head start, as in you were paying for 30 cents of intrinsic value on
Yes.
the bullish spread in the noon one, and this spread right now, you could close out for, you know, 60,
12 cents.
65,
12, 65. It's like 5 cents on
yeah.
the bid. Yeah.
Now what's intriguing there is, you know, if you're still bullish, maybe you let that run, right? But let's say, you know, the number wasn't big enough. I don't know how. It was a big number, but you can always close out this trade. And then what happens is that your 62, your bearish spread, remains active
Right.
until noon. And
Which
so
is really sweet.
yeah, if you think it's spiking the wrong way, maybe you just think, you know, maybe you think, hey, on that type of a miss, this market should have gone a lot higher. You know, and maybe
Yeah.
you say, you know, what's going on here where we came in decreasing 4.6 million barrels. We're looking for a rise. This market should have spiked above 63. Something's not right here. I'm gonna break even on the trade. I'm gonna take
Yeah.
my money off. And guess what? I think
it
it's
ride.
more bearish than, you know, I thought
Right.
it was, and I'll keep this bearish one open. And what's nice is some of these examples, man, it's really worked out well with the reversals lately in
It
terms
has.
of the first move is not the move that actually is the one that's carried out throughout the day.
Right. Pretty
so
cool.
we'll check back in.
Yeah.
It's only 3 minutes past
Big
when the
number.
news comes, and we got lots of oil trading left in today for sure.
Oh, yeah.
Oh, yeah. Check back in on oil. So it's 10:42. We're 12 minutes after that news, and we're now below where we were prior to the
Yep.
numbers coming out. Pretty remarkable. We get such a miss like that. And like we talked about, you could have maybe... there's a number of ways to trade that when you're
Sure.
dealing with two contracts, especially one to the upside, one to the downside. But if you want to think about having fast fingers, man, because we got a spike up to almost 62.80,
Yeah.
and we're now 50 cents below that level.
And the
when we-
noon one, you would have been ahead by 5 cents because you could get out at 65. The bid was 65.
Yeah, 62.65 would have been the example we were looking at. You
Right.
could have exited
Right.
that position, taking value off the bullish spread. And as we approach, so let's just jump in. The noon, here's our noon spreads. And again, we would have...
62 we had.
That's
Yep.
So this would have been the bullish spread that we
Right.
talked about. You could have potentially exited for some value. If you had done that, your bearish spread, 62 down to 60.50,
Yep.
would have been the one that remained active. And you can see this is still pretty out of the money with 37 cents out of the money, but you have until noon. And with this type of price action, these are 5-minute bars we're looking at.
Right.
Right now you only have 3 cents, which would be $3 in value if you're going to buy that back.
Right.
But you have in a good hour and 15 minutes, and guess what? If you had made that trade, you had covered your entire investment, and anything you had reaped in there would have been a profit.
Exactly.
So pretty interesting, the move in light of that surprise. We haven't seen a surprise by
That
almost
big.
6 million
Yeah,
barrels when
right.
you look at 6.6 essentially, where we had 4.6 million barrel decline, and when the market was looking for a 2 million barrel rise. And right back where we were. All right, we'll check back in one more time throughout the hour.
Welcome back, folks. That oil market, man. Look at that oil market.
So we fast forward, 10:55 in the morning. Yeah, and this is where it's always intriguing, man. So it pulls back to 62.35, and then boom, these are 5-minute bars. Spikes all the way up to 62.93, above $63. So that's where, again, if we looked at, these are the noon spreads we're taking a look at. This would have been our bullish spread. You got another opportunity here. This time, you could take the bullish one off for $90 in potential value.
and you're only 60 cents.
60, yeah,
Wow.
60 cents, so you'd have some profit. And again, you would still,
Look
and
at
let's,
that.
we're now 90 cents out of the money for the bearish spread to have any value. But man, when you're moving in a 5-minute bar, a solid 50 cents from
Well, 90
62.42.
cents, you only paid 60. So that's not bad.
Right. No, yeah,
Right.
that's a 50% profit in
Right.
itself. But, the point is you just move 50 cents in 5 minutes. So even though the bearish spread would be 90 cents out of the money,
Right.
there's still a realistic probability that could have value by noon,
Oh,
and
yeah.
you would be locking in your profit by just closing out the bullish spread.
Huge.
Pretty remarkable how,
Wow.
if you follow these on a weekly basis,
Seriously.
where does that come from, right? Is somebody waiting out there to see how this market reacts? Because it was a huge miss, and we
Right.
said you'd expect some price increase
Yes.
more than what we got.
Right.
And you just had to wait 15 minutes, and then it came into the market. Pretty interesting.
And I came in at 50 cents.
In 5 minutes, I know. So there was a buyer in
50
there for
cents.
sure. And that buyer was saying, hey, you know what? With those types of inventory numbers, this market should be higher. I'm going to buy it. And they sent it flying, man, and we'll see. Pretty
Holy
intriguing,
cow.
for sure.
Totally.